Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Mike Ralston, CEO of Blencowe Resources. Welcome back, Mike. How's life treating you?
Yeah, thanks very much. All good. We've had our heads down getting this pre-feasibility study completed, but we've done it now and obviously it's looking very good. So we're ready to come back with a big bang. Yeah,
so obviously, as you just alluded to, we saw the much anticipated PFS for Orom-Cross released. And obviously looking at first glance, it certainly looks outstanding to me. A 52% increase in the PEA and net present value of $482 million. Am I right in these assumptions?
Yeah, when we did the preliminary economic assessment last year in September, we announced a $317 million NPV. That's been raised to $482 million US now. And that's obviously an outstanding result for a project of any caliber. But in particular, the fact that the CapEx number has gone down from 80 million last year to 60 million to deliver that is obviously of value to us as well. So yeah, we're overjoyed. We think it's a great result, and we obviously hope that the market can recognize it for that.
Yeah, and you have fantastic margins as well there in terms of operating costs against your weighted average sales price for the basket of the graphite. So that is also extraordinary, $800 per ton margin.
Yeah, and I think, look, to be very honest, that's helped us a lot over the last 12 months between the PEA and the PFS. The cost of the graphite prices have moved. They've started to shift. Everybody has been anticipating that for quite some time, and the much awaited price incrementing is starting to happen. So we believe that it's only the beginning. As the demand to supply shortfall starts to kick in, there's going to be a lot more price incrementing going forward. So those margins that you mentioned, Kevin, are probably going to continue to grow as we go forward, which is good.
We're obviously in a bit of a storm at the minute, if you like, in terms of the whole planet, in terms of, if we went back 6 months, everybody was EV. And since the Russia thing has happened, everybody's running for energy security type scenarios rather than worrying about the future. But at the same time, there's billions of dollars being invested in the ground in these gigafactories, and these gigafactories need graphite. So have you any idea where they're going to get the quantity of graphite you think they're going to need?
Well, it's a very good point you raise. Of the approximately 300 gigafactories that are in various stages of being drawn up, commissioned, built, etc., probably 2/3 of those are in China. So they have their own little world where they have their own demand and their own supply, and they tend to operate within their own four corners. Having said that, I've had some very interesting discussions with Chinese companies that are reaching out to us already. So they are starting to break out of that mold of getting supplied by their own mines. But I think that there's going to be a huge push as these gigafactories start to open their doors, turn on the lights, and suddenly realize that one of their key input materials, that is a flake graphite, where is it going to come from? And we want to be one of the mines that are in production with a high quality product, ready and waiting when the penny drops. Hopefully, as that penny drops, the prices will continue to push up, so our margins will increase as well. But we really want to be there waiting when, I guess, everybody comes looking and saying, where's the next big graphite project that we can get product from going forward over not just the next couple of years, but literally for the next 50 to 100 years. Yeah,
and net present value of 482 million US. So on the current exchange rate, that's, in and around 400 million pounds, British pounds. I think a very conservative market cap valuation for Blencowe Resources should be sort of 8 to 10% of that. So you're talking 30 to 40 million sterling, and your current market cap is around, 4 million. So how do you weigh that up now? Do you think there's going to be a huge response to this PFS? And if not, what's the way forward for Blencowe? Because you'd sort of have to be giving away an awful lot now to then go to the mine stage.
Yeah, no, I understand that. Look, I can't answer why the market cap is so low, because the market is a market and people have the opportunity to go and buy shares at any time. The market's been waiting to see this PFS. So it's sitting and obviously watching and seeing what will come out. So yes, this is a huge milestone for us. It's a line in the sand. I'm hoping it obviously makes a big difference to people's perception of who we are and what we're worth. But at the end of the day, as you rightly point out, the market cap should be in the order of 10 times what it is. We've got to go out there and we've got to market ourselves. We've got to get as many people to understand the story as possible. Everybody else, we're sort of trying to scream and shout and get attention. So we've got to do that as effectively as we possibly can. And yes, again, you're correct in assuming that as we go forward, any capital raising that we do in Blencowe, if we don't raise our market cap and our share price, is going to be very, very dilutive. So my intention will be to look at project partners going forward. And if there are any of those strategic players that I was talking about a minute ago who are interested in coming on board, it obviously makes a lot more sense for us to bring them on board at the project level rather than at the corporate level at this stage. Now, that's obviously subject to what happens with the market cap and the share price going forward. But where we sit today, that makes most sense.
And the other thing that struck me was the 14-year mine life that was mentioned, which obviously you alluded to, that could obviously be increased by additional drilling. Now, what sort of area does that cover then of that 14 years of the whole project?
Well, we've drilled out approximately 1% of the entire project. It just requires...
Sorry, mate, did you just say 1%?
Correct. 1%. There's an estimated 2 to 3 billion tons. And that 1% that we've done is obviously something that can create enormous length in terms of life of mine. Wow. And at the end of the day,
I'm just trying to get over that number, to be honest. I don't know what you think of that.
Yeah, I know. And it's amazing because there's, as I say, so much graphite there, both along strike. We've got a 19 kilometers long strike. We've got about 1.5 to 2.5 kilometers wide. And then it goes down to about 100 meters below surface. And all we've done is take one small little area within that, and we've gone down to 25 meters. So below where we are actually going to be mining, there's plenty more graphite. Further along strike, there's plenty more graphite. And we can continue to expand this project and build it up. And that means a lot, because the EBITDA in this project, as it stands in this pre-feasibility study, rises to around about $150 million per annum when we get up towards that 150,000 tons. And if we can consider a market where the demand starts to really build, and we've got the ability to drill out a whole lot more and potentially double the production volume. So I'm talking in the region of 250, 300,000 tons per annum. There is the chance that we can really create a huge project here that can deliver some serious returns. And that's the opportunity. That's the upside. And that's where we'll be appealing to any project partners who want to come on board and develop this with us.
Okay, so I see this now as the 1% share. So the current market cap is 1% or less, actually, of the MPV. And you've actually used only 1% of the area to generate the graphite.
Correct. Absolutely.
It's bizarre. It's completely bizarre. So the whole thing is crazy in terms of its valuation. Yeah, we've had a poor market and all the rest of it. But you know who isn't crazy is your 10% shareholder is not crazy, because Rap Capital know what they're doing in terms of owning your 10% of this company.
Sure. And, our job is to go and find other RABs, to go and find other parties that are equally sticky, because RAB is a sticky long-term investor and they want to come for the journey with us. So I want to find as many of those who believe in where we're going and what we're doing as possible, and then join us for what's going to be a heck of a ride going forward, because over the next 12 months, we want to evolve into a graphite producer. And there are not many of those around.
You reckon if you took another 10% of the free flow away from this, it would go absolutely gangbusters? I
think so. I do believe that there's a lot of momentum building. We just have to break through what, as you said, has been a very, very tough period in the market. And we have to show people what we've got, which is what this PFS does. And then we just have to continue to do what we're doing. And that is deliver. And, we're, I think, 2 years and 3 months into ownership of this project. So we've moved from literally picking up something which had nothing, and we've moved to a point now where we're hopefully 12 months away from production with a mining license and a huge big feasibility study result. So it's all pretty good, but there's a lot more work to be done, and we're obviously moving forward. The day after the PFS is completed, we start working on the next phase, and that's just how we are.
Okay, so to recap, basically you're going to be going out now looking for a partner to come up with this $50-60 million to build this. You don't intend to raise funds to massively dilute the share price, because at this level, it just doesn't make any sense. I mean, when we were talking before, you used the phrase, it's like giving the farm away or the family farm away. It doesn't make any sense. So I just want people to be clear that's the way and the methodology that you have at the minute.
There's actually two stages, Kevin. So yes, obviously we want that partner to be involved in the stage where they help us to build the main plant, and that will be a combination of debt and equity, by the way. It's not just going to be equity given away. So in between now and then, which is in the next 12 months, we're looking to build an initial stage plant, which will be essentially a pilot plant, a much smaller version of the main plant that will then deliver graphite from mining, processing, and all the logistics through to end users. So we can pre-qualify our sales, we can show the end users exactly what we can produce and deliver, and that will go a long way towards any big partner that wants to support us for the much larger capex of going into main production, because they can see then that we're actually able to do our job and deliver graphite end to end from the ground. So yes, you're right. We do want to find a partner to help us fund that 60 million, as I say, which will be mostly debt and some equity. But over the next six months, I'm going to be looking for a partner that can come on board in the first phase, and that's help us to deliver this pilot phase and go into production from next year.
Well done. 2 years and a little bit, and you're at this stage where basically you have net present value product of $500 million, and basically EBITDAs of over $1 billion. It's quite a project, something that the world's going to need. And good luck, and we hope you find this partner, because I think it will benefit everybody, including the partner, including the shareholders, including yourselves.
As I said, it's a journey, and you never stop. You're just continuing to keep running down that pathway. So world markets go up and world markets go down, but we just keep going straight forward and continue to do what we do, as long as the project shows that it's worth doing. And obviously these results do prove that. So yeah, we'll continue to add value, and we'll find the right parties to join us on that journey as we go forward.
Mike Ralston, CEO of Blencowe Resources, thanks very much for your time.
Thank you, gents.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.